So what's up everybody, Bueller here again, and today we're going to be covering the basics of charting as well as a bunch of the swing trading stocks that we looked at the past 2 weeks. I'm going to be breaking down all the different fundamentals of our charts, what levels we like to look at, everything. So let's start. So one of the charts I want to start with is ABNB. Or actually here, y'all throw a ticker in the chat. What tickers would you like to see broken down for the TA routine? Here, let's do Etsy. Etsy's a really good clean ticker. So the TA routine. Who all in here is familiar with it? The basics of charting and how we can, in the most simple manner, find our levels. I'll do AMD next, easy. We'll do Etsy and AMD for the TA routine, and then we'll move on and we'll do breakdowns on the swing trading and stuff. Good ticker, though. I was thinking of that one as well. All right, so step one of the TA routine. You need to mark your range on the weekly time frame. You can also do this on the daily. You can entirely skip the weekly time frame if you want. I just prefer to go to the weekly because it gives me my overall range. So I know I'm not just marking a bunch of random levels. So I know if I mark this right here or this level right here, I have a really good area of resistance turn support. So I know I have a really good bottom side of my range to look forward to. Okay, I'm also going to mark my resistance up here and the top of this little doji emerging candle right here. So now I know I have a really good top side of my range. Now you're going to go down to the daily. And again, just like a book, you read left to right, right? So you're going to start just right here. Ignore everything on the right side of the chart. We're not focused on all that right now. We're just focused on current levels around current price that are an emerging candle and a level of high importance. It has multiple touches, a gap range even. But let's start with that. So I'm going to mark this shoulder right here. I see prices well above this 197, so I'm going to work my way up. I'm not going to mark every emerging candle. But we have another emerging candle here. And an emerging candle, in case you haven't seen any of these videos, is a candle that in which breaks a new area, has high volume, but pretty much what you're doing in simple terms is marking the tops of your buyers from left to right. And this is very effective. End up marking some of these levels right here. Let's mark that one. All those emerging candles all broke new areas. And it looks like I have just about everything I need just from that left to right side. So let's auto zoom back out. Let's kind of move back to the right and let's see just how well some of these levels have worked. So we have that good range right there. We can see price went up, hit that high, higher high, built a base, is now moving using our levels along the entire way. So looks like I missed a couple levels here. And sometimes you will have to go back and just kind of re-scavenge through it. You can see there's a wide range right here, right? A lot of black right there. So I'm going to mark the top of that candle, top of that candle, top of that candle. Now we have a lot more levels to look at. And this might cluster your bigger time frame charts, but what you are doing right here is for the smaller time frames. This is to help you create a trade plan for day trading on the smaller time frame. And then we'll add on the BB system at the end and you'll see just the effectiveness of this. Another cool little method I like to use is drawing some ugly lines. And what I mean by that is going to the daily time frame, drawing some ugly lines like this. Like you see that's a very strong angle held right there. You want to draw it. You don't have to mark it if you don't want to. Not every trader needs to mark trend lines. You can just abide by your levels. You don't have to follow trend lines. So if you do want to mark trend lines, please find at least 2, 3, 4, 5 points to mark from. Don't just grab from here and current price. If you mark something that is relying on current price, you're literally just looking at a pivot foot. But let's go down to the smaller time frames and go down to the 4-hour. I like to clean up my ugly line on the 4-hour. So I can see there's a good base here. There's a good trend line right there. So now I have a little more accurate of a trend line because I'm on the 4-hour where I see all of the price action, both extended hour and intraday. So you see it all kind of in one area. So you can also mark another one here if you wanted to. I'm just going to leave that bottom one though. Second to last step is going down to your 30-day, 30-minute and getting everything else that you need that you didn't have. So if I see any levels kind of in this area, right now I don't have to. Etsy kind of has everything marked. But if there was ever any wider areas like right here, I see there's a very strong support right here that price caught on top of. And then the very next day when price cascaded, it sat on that very same level 1, 2, 3, 4 times before it moved back up. So I know it's a very important level. Also, I see there's a really good resistance right here that price kind of jump roped around for the past 3, 4 days. Price was now using that as a break above before even reaching this now top range. And again, what you're doing is just analyzing the price action that's happened between your levels, just so you have a good familiarity with it. Move down to about the 5, 10 minute, 15 minute, whatever smaller time frame you want, and get your smaller price action done. Okay, so ignore that all of this has happened today. Let's just focus on the pre-market and the previous day. So, or past few days, I should say. So you see how there's a recent high here? You're going to want to mark that. You got your previous day high, you're going to want to mark that. Previous day low, you're going to want to mark that. Pre-market low, that's a very strong level. Pre-market high, it's a very strong break above level. So what we use is this is kind of our initiating range. This is kind of the range that gets price warmed up and out of the initial range. Again, the initiating range. But price ends up breaking above the pre-market high, as you can see, so we're getting good bullish momentum here. Ends up hitting through our target. So regardless of all the price action that's happened today, what kind of trade plan could you guys have set up on this today? Just utilizing all of the levels that you analyzed from bigger to smaller time frame. Again, sticking to your rules all the way through. What would we have set up for a really strong break above? Pre-market high could have been a good just initiating break above with a good initial target at that bigger time frame 215.50, but this can also be used as a bigger break above. Again, you got to remember this is just the initial range that it is stuck in the morning. So that's why you always hear me say wait 10, 20, 30 minutes sometimes, and you'll end up getting a lot of those better breakouts. Let's see right here. It took 5, 10, 15 minutes to break above the pre-market high, 15 minutes to hold above that bigger time frame level. So it took some time. It wasn't just the first 10 minutes you enter it. But let's see here. Let me back up again. So now downside, again, we are not a biased chat. Regardless of what day it is, we're going to be looking at both sides of the chart for plays. What would have been a really, really good break below? That pre-market low, that previous day low slash close, as both those levels kind of lined up. Yesterday's close was the low. So again, seeing this entire little area here as a good initiating break below, just a good initial range to get out of. So that would have been a really, really good break below. And again, what do you have outside of that? A bigger time frame at 212, 211.60s exactly. You have your trend line to look forward to. What do you have under that? You have plenty of levels to look forward to that we've already assembled from the bigger time frame. So hopefully that makes sense. Hopefully that little breakdown kind of helped you guys with the trade plan. We're going to do another chart or so, of course, but how was that so far, though? Anybody have any basic questions or any major concerns over anything I might have gone through? And again, if you want to hammer back through this again, I have an entire playlist on the YouTube channel that breaks every step of this down even more so. So there's tons of videos on this. But let's go to AMD. We'll do AMD next. AMD was the one I was thinking of too, Steezy, because it has very clean price action. So I know that I can rely on just a very simple trade plan. Also, it helps that the chart doesn't have a million years of price action sitting right here. So of course I can kind of just focus on a newer area. But this is a really good topic because a lot of people don't know how to chart when charts are this high. So let's of course get our, whoops, not click that. Let's get our initial range. So we'll end up getting this resistance here that price broke above, so we have a good, kind of base area to look forward to. Also mark one way down here. And then I don't think I'll mark anything else in the weekly for top side of the range. Let's go to the daily and get the better levels. All right, so we have this emerging candle marked. That's where we initiated the breakout. I see we have a very strong emerging candle turn support here. This is a very, very strong level. I would almost just mark this red because once that is broken, you can definitely assume retracement to the 100 level. And let's keep marking our emerging candles. Emerging. Gap range. Decent gap range too. It's only been filled once, twice, 3 times. So not an amazing amount of times. It has happened, so you won't get the excitement as the first time. You don't have that, and that for sure move to the bottom side of that range just because it already has been filled. So it doesn't have to for sure fill anything anymore. But now you have a really, really good potential break above level on your bigger time frame. So even just charting from the daily time frame, I have already almost made a better trade plan without even going down to the smaller time frames yet. You know that this is a very good level for break below because it was used as resistance turn support. That's a very, very strong level. Again, right up here, you know that that's not just a good gap range, it's also where the all-time high stopped at, where we retraced from, and where we have retested and failed. So you now know above that level on the bigger time frames, that is a very good bullish area once we get above it. Same thing as if we get below that. Let's keep moving down our time frames though. Let's get a couple levels going. I don't really want to mark any trend lines. I'm not really a big trend line guy. When it comes to trend lines, it's because I'm looking for a pattern, but I'm not looking for patterns here. We're just breaking down the basics of charting right now, so I'm of course not going to be as focused on that. Let's go to the 4 hour, see if I can mark anything else. It doesn't look like it. We'll go down to the 30 minute. I like to go down to the 30 to actually get my extra levels here. So like just looking across, I can see there's a really good resistance here. There's a good resistance here. Which one do you want to mark? All of them. You need to mark that resistance for sure. You need to mark that resistance for sure, and it looks like that's about it. There's a level right here I want to mark. Strong support. And anytime we've not held that support, we've held that support. So I want to keep those both marked. So it looks like we have almost everything we need. Let's go down to the 3-day, 10-minute just to make sure on the smaller time frames that we have the previous day marked. And as you can see, that's actually where we pushed off of today. was not just that bigger time frame level, but also that previous day low. So this area is a huge area of demand that is for intraday demand. That is definitely a good area for where buyers are present. What is a good area for where sellers are present? A good area of supply. It's going to be right up here against that previous day high and that bigger time frame level. So for intraday, yes, there's a lot of supply here and a lot of demand here. That is where our plays are. Let's see, pre-market high. We already have our pre-market low marked. We already have our previous day high and low marked. So trade plan. What is break above on this chart? And again, please disregard all of the price action that's already here. What is a really good break above plan? And this is actually how I found my levels today. Was I was playing break above of 110, 110, 15. That's when I was looking at SOXX earlier in Nvidia, and we were looking for bullish momentum with those. So that would have been a really good initiating, kind of breakout range to that area of supply. What is a really good break below level? Again, disregarding all the price action that's already here, what would have been a really good area to break below? This area. The pre-market low, the area in which a lot more of your break below levels are lining up. You have your previous day low, your close is very close to here, your pre-market low is here, a bigger time frame level is here. And again, it isn't just, all right, I start shorting AMD to the floor, where do I go? You have many targets to look forward to. On this chart, I didn't mark as many, of course. There's definitely a level in between here. But as I'm saying though, that is what you want though. You want to cluster your daily time frame, your 4-hour, your 30-minute. You want to find as many levels as you possibly can for when you are trading on this 10-minute. You have everything already set. You really just have to kind of sit there, be patient, wait for your opportunities. And again, that is why I instill that into you guys to go every single day and visualize different types of entries. So let's go over different types of entries on this chart. How could you have traded AMD today? And again, I'm not going to be Captain Hindsight. I'm going to give it to you straight. There's only a few types of entries on this exact chart right now. There was only really one trade opportunity, an aggressive 40% entry above the 110s up to that main target area near the higher 110s, 111s. So that really was only one type of entry there. If you wanted to take that retest of that bearish engulfing off of that area of supply, yeah, you definitely could have. But I'm not here to be Captain Hindsight. I'm just going to cover as many passive entries as I can. The only one I really see is this 40% right here. As it looks like, actually, no, there is one more starting right now as I'm speaking. There's a really strong break below right now as we're speaking, back below the 110s. Again, reusing that break above as a break below. If you have a rise in sellers and you see a 3-bar play like that under the 9 and it's breaking back below the level, yeah, that's a very decent short opportunity right there. But let's go on to another. We'll do one more chart. Let's try to find another one, and then we'll move on to the swing trading aspect of everything in this stream. So what's a pretty good example I've done in the past? Have I done DDD before on this? I don't think I have. We'll do DDD, just because I'm familiar with it, and I can go through a lot quicker. Alright, so, again, guys, what time frame do we start on for our range? We want to start on that weekly time frame. We want to just get, again, around the current price. So I want to get the top side of my range. I want to get the bottom side of my range. If you want to start down here, you can. And again, starting from left to right, like a book. Start from this left side. Mark all these emerging candles. I'm going to adjust that one. Oops. Emerging candle, emerging candle. If you want to go all the way to the moon, you can. Then let's auto zoom back out. Let's see how those levels have worked out so far. Just to kind of give us a review of the chart. So price has cascaded down, held this area of support, rejected. So looks like we have a level outside of the area. Zoom in here now that we've kind of established all that price action has been used, and let's start marking some more levels from left to right. That candle, emerging, emerging, emerging. Just looking for more levels. Looks like we got another level right there, very common resistance before we had that gap up. So I'm also marking the gap range and the common resistance. It looks like we have everything marked so far. So let's move down to the 4-hour, see if we can see anything else we need to mark. Doesn't quite look like it. Very strong level of resistance right here at 30.38, I should say. Right here, as you can see, 1, 2, 3, 4, 5, 6 days in a row, price rejected that same resistance. We'll go back down to the 30 to 30 minutes, see if we can find anything else we want to mark. And what you're looking for when you're going down these smaller time frames, like the 4 hour and the 30 minute, are going to be support turn resistances. Like right here, I could see we had a breakout right here, kind of a fight jump rope right there, and then price went up and retested that. So that's a very strong level at 35.70s. I also see I missed a level here. There's a good support, kind of had a jump rope around it, and then price fell from that level. So very, very strong support turn resistance. You can see it was support, very strong support, not as strong support. Sellers are wanting to take more control. Sellers have complete control. So you can see just across 3 days the difference in the phases there between buyers and sellers. So see if I can find anything else. Looks like there's a good 3-bar play right here, but I don't want to just mark it randomly. Actually, yes I do, because it ends up lining up with the support right over here. So we have one more good level from that time frame that we could have added. Let's go down to the 3-day 10-minute and start making the rest of our trade plan. So again, disregarding all of today, what is a really good trade plan for this DDD chart? And I'm going to, of course, get my pre-market high. We already have the low marked. We already kind of have our previous day high marked, or adjust that one a little. And we pretty much have our yesterday low marked. So we'll just adjust that one a little. So trade plan, what is the main trade plan? What are we looking for break above? It looks like we're going to be looking above the pre-market high up to this level, in which we can look for a second level. What is a really good break below? Well, looks like we kind of had our pre-market low way up here. We also gapped down under that. But it looks like yesterday's low would have been a good initiating level to get out of that range. What are good levels outside of that range? We have a bigger time frame level here at 3170. Looks like we have a little bit more room finally through that level. Looks like there's a level here to mark though. 3130, again, the support control point, support, break above, and you can see going into the 2 days later, you can see it's being used as a potential target. Already kind of tested with that wick. We'll see what it looked like on the 5-minute. Yeah, today's low ended up going to that exact same support. So no, not amazing opportunities here for day trading. Again, you're not going to want to day trade DDD every single day. We actually just day traded it right here the other day. 33 strikes. You can see that opportunity utilizing those levels. And then here again, coming back down. So today looks like a big breather day, really from the bigger time frames. But again, marking through this system every single day. Yeah, this looks kind of clustered, I'm not going to lie. But that is okay, because when you are on that smaller time frame, you are not going to be worried about that. You're going to be excited. You're going to be happy that you were that prepared and have that many levels ready for you. So this definitely doesn't justify all of the TA routine playlist, so I definitely do recommend going back through that to get a better picture of everything that we do with that TA routine. There's definitely a ton of different uses, ton of different setups, ton of different charts. I've done it on probably 100 different charts on those videos now, so definitely worth going through the playlist. But here in a second, let's go through the rest of this stream, which is going to be the breakdown of all the swing trades we've been doing recently. Utilizing just these types of levels, just the 9 EMA, just my price action, just candlestick patterns. I'm going to show you all how we've been trading lately. So we're going to start with PDD. Get a drink of water first. But before we move on, did anyone have any questions about the TA routine or any of that, or was any of it confusing? Was there anything positive to say? Did you guys pick up on something that you weren't used to picking up on before? If you're new to this, was that helpful? So on and so on. Please type on the trade floor too if you're gonna reply. Moving quickly. Sorry. So, and that's the thing, Kang. It's super simple. It might seem hard or even kind of weird at first, but after you go through it, 10, 20, 30, 40 times on your own, kind of on your own time, just going through random charts, really, just go find a bunch of random charts, go through a bunch of different watch lists and start marking those levels. Putting yourself through that routine repetitively is going to help you memorize that. But no, it's definitely weird at first. I'm not even gonna try and like say no, stop, you're hating. No, it's definitely weird at first. People aren't I had to kind of make up the word emerging candle too, because I didn't want to just keep saying top of the buyer candle, because that's not true. I don't want you to mark every top of every buyer. It really does need to be Um, it really does need to be settled. What's Rocket Lab doing, Onion? Do I even want to look? That's what I was saying earlier, man. You really can't, care about what kind of fill you get when you're entering a long hold. That position isn't for next week. That position's for April of next year. And I'm not bagging on you. I'm just for anybody listening to that, that is why I said, don't technically worry about where you enter. We're up 56% on that trade right now. I'm glad I called out enter a third contract. All right, so let's start some of these swings now. I've been recording, so I'm gonna have to probably cut that. So, the list I'm going to be referring to, please go to the BB System channel, scroll above my today's watch list. You will see the list I am going to go through. So you're not, behind me. You can see what I'm about to go cover. But all of these are using just pattern trading. A lot of those simple levels you saw me go through, and a lot of the time I don't add that many levels. Sometimes I just kind of focus on just the important ones near current price. And then also the 9 EMA, utilizing just the 9 EMA with pattern trading and the different little rules that you'll see me add on each here and there on different trades. So that's why it is important to scan through not just the old videos, but go through the new videos as they come out. So if you didn't catch any of the past, swings from the last 2 weeks, it's okay. There's always going to be more opportunity. Definitely not worried about that. But oh, sorry, I was seeing a DM. But us go through these though. So make sure to be reading through that list, and we'll knock through them. So if you have any questions along the way, hit me up. But I'm just kind of cover how I blandly go through my charts, and then also the types of entries. So here we have on PDD. This is a Chinese stock. The only reason, and again, first rule of any swing trade, you need to have a reason why you were looking at the chart, a conviction, a point of interest, something, right? You need to have some sort of reason you're looking at this chart. So besides earnings and besides all this weird gapping down here, the only reason I was looking at PDD was the hype buyback of ARK buying back Chinese stocks. And that was true. They were buying back a lot because we were near very heavy support. So regardless of this being the bottom or not, from an investor's point of view, from someone who invests for long term, yes, this is an amazing area to start buying some more shares. So yeah, I wanted to see some hype as I was building up towards that. So that was my reason, my conviction to be looking at this chart. Okay, so that is step one in any trade or in any swing trade. You need to have a reason of why you were even looking at it. Okay, price ends up gapping up. I said, all right, well, I know that that's probably going to slow down because I don't want to just play an unsustainable move. So even if it did move up another day, I'm not going to be sitting there going, oh, I wish I would have just entered. No, I'm sticking to my rules. I'm going to stay disciplined. That moved up way too high. I know that that needs to slow down. Slowdown ends up happening. The entry was on this third candle. I wasn't looking for a fourth. Fourth candle popped up. What did I get? I got a green volume, so nothing amazing. End up holding my 9. So either way, I entered a day early, whatever. Looks great. This is giving us a good candle with a good bottom wick. This is still holding not just a bigger time frame level, not just this recent resistance, but also the 9. So it's holding with amazing volume. Also, what kind of volume did I have moving towards that 9? I had lowering volume all the way until that buyer technically broke us out, even if it was only by a little. And if you've watched the workshop video on JBait covering volume, you would know that that candle and that volume does not match. So there's definitely a pickup in buyers here to some extent. You get the gap up the next day. What level are you looking to hold? You want to see it hold the point of interest, the level that even got you into this. It broke up to this level. You need to have that marked. Next day, gap stock ends up moving up. You need to be taking profits, one, either here, if you're someone who just wants to take that overnight swing, or taking profits through this level. You don't need to be holding to just some random level. The target was 103.60s. That needs to be where you're selling. Okay, so if you want to scale out or set a trailing stop for further gains, that's all you. More power to you. But I'm going to give you the for sure move, the for sure trade. So that was PDD. That's exactly everything we were looking at. Also, another thing to kind of add on this, and I didn't want to say this because it had earnings, so I don't really like to look at the left if it kind of had earnings here. But a really big thing too is this was kind of the J hook pattern I was talking about. It isn't as clean, but you end up getting your gap down, another gap down, another gap down, and then you end up getting a gap up, gap up. What is this candlestick pattern? Not only did you get that kind of J hook that I was talking about earlier, but what candlestick pattern is it? That's a bullish kicker. We technically just gapped up twice, and I started back above. A bullish kicker is where the previous red day, and you want to see this in a downtrend. Everything is based on positioning and swing trading. You want to see how price closed here. We kind of went up, came back down, closed here. Price started well above that entire candle, the entire body of that candle. There's a very strong buy reaction. Okay, next day that ARC stuff came in, and then you already saw the rest. Let's move on to the next chart. You'll see plenty of those examples as we go across. DDD, one of the ones we just broke down. The entry that we had ended up playing was right here, and we are still in the November play. We still aren't even out of this. I think we're up about 22% here. Slightly in the money. I think it was. Oh no, we were in the money here. We're back out of the money again. But what were the levels though that we were looking at if you were wanting to take this trade with us? We're looking at mainly that gap range. Price had already kind of filled it, came back down. And again, what was my reason for looking at this chart? Again, conviction. Why did I want to look at this? Because I kind of got my hook here. I kind of got that little morning star there. You got your gap down, tweezer bottom, bullish engulfing, another gap up. That gap up candle ends up showing the fact that that has a gap shows that there's a lot of buyer momentum. Okay, that is giving you kind of an interest in it, right? Price ends up picking back up, closing over the 9. Now you have passive entry. Now it's just ride the 9 either until you want to sell at the gap or sell whenever in the future, but main target is going to be that gap. So after 1, 2, 3, 4, 5, 6, 7, 8 days, you could have taken profits on those November strikes that we had that were in the money. They went in the money by about $1. So amazing trade there so far. But let's move on to the next one. Does anybody have any questions on that one? That was pretty basic. It was really just one pattern, play it up from the entry, play the gap up. But let's keep going through some of these. And remember, I am only finding passive entries. I'm not just circling any other place. Remember. Okay, so if you ever end up seeing a good entry that had already happened before and you're someone who's trying to enter late, you need to remind yourself that you are entering late, so there is a little bit more risk compared to someone who was looking at this the day prior and got to enter before you. So be real with yourself too. You are your number one enemy when it comes to swing trading. And let's talk about positioning real quick before I move on to the next charts. So positioning. Let's say you're in a downtrend. Where are you wanting to look for bullish and bearish candlestick patterns? You don't want to just look everywhere. You want to find bearish candlesticks towards the tops, and you want to find bullish towards the bottom. So as price is cascading up and down this channel, you're playing the highest probability moves. Damn, I cannot draw today. So anytime I see a bearish engulfing, an evening star, a kicker, and, any kind of those dark cloud covers, I'm going to want to find them towards the top of those channels. And again, so if you're someone who wants to draw those trend lines and just give yourself that kind of visualization, it's going to help you out a lot. A really good past example that I used to use was Apple. Let's show this real quick and see if I can get it again. Yeah, it was about right here. So again, just ugly lines. I'm not giving you guys 100% perfect lines, but let's just say, you were someone who was focused on just this angle that Apple was stuck in for a while. Let's see what kind of patterns popped up. After that kind of hook up, getting a bearish engulfing, you end up getting kind of that gap down, gap up. So a very, very long hook pattern there. But what patterns do you have in there? You have a soldier, I'm sorry, a piercing line. You have that morning. You have another morning here. That's a hook. That's a perfect hook pattern right there. You end up getting that gap down. You have more than 2 candles down there, and then you get that gap up. The next day candle closes over that 9. Very passive entry. Let's keep moving on though. Let's keep finding a couple more patterns as we're looking to the tops and bottoms of this uptrend and downtrend. You have a J hook pattern on top, bearish. So anytime you guys are looking inside of a trend, you need to be looking at the right side for positioning. You don't want to just start shorting something that has a bearish engulfing at all-time lows. That is not very high probability. If anything, that's kind of a no shit trade, right? But let's keep going through some of these charts. So we just stopped at DDD. Let's go to Amazon. Amazon, we made over 350% on this trade. Amazing job if you took this with us. It's okay if you didn't, but I'm going to cover on how we did. So we're going to mark a couple of these important levels. But let's, again, find our reason for why we like this trade. So at the time, when we were in stream, we had entered this before it closed over the 9. But either way, end of day closed over the 9, and you had a second passive candle there as well. Okay, what was our reason though for liking this? One, we'd already been eyeing Amazon for a while, and we had seen that it failed to push up at all. Very weak amount of just push there, really nothing right there. Price kind of cascaded down, so very, very good chance to maybe get a long position in Amazon as the market is moving higher. We had SPY and NASDAQ breaking all-time highs. Yet we had Roku down on the dirt. We had Amazon down in the dirt. Guess what two stocks that everyone was raving about just recently? Amazon and Roku. And that is because they were down in the dirt and in really good positions to possibly take higher. But regardless, let's get a couple other levels marked, very important levels. You see we have a very strong resistance right here that was used as support. And then again over here, let's mark that second emerging candle. Third, and we'll mark that fourth. Therefore, we have just a couple of the levels in the area, not only just above, but then we can also get some below. So if you ever wanted to see that Amazon was near a very important level, you could go over to the left, find very good resistances. If it's been used as support, then this isn't just a random support find. This found support near an area of support. It wasn't just out there in the middle of nowhere. So you already have your conviction, you know, the reason you're looking at this trade, you have your kind of hook morning star, ends up closing over the 9. You have another passive entry here. What is this next candle? So now that I've already kind of have my reason why I'm here, we've moved up. What is this candle here? Does anybody in stream know what that red candle is right here? What does this candle represent in our swing trading? Leland said the reset. Yes, 100%. This is the reset candle. A lot of the time you don't just keep moving up. What is the definition of parabolic? The definition of parabolic is an unsustainable move, a move that in which has no breathing in between, there's no exhaust in between, there's no help to help it, keep pushing up healthy. If it just keeps moving straight up, it's going to be very unsustainable. So no, this didn't just move up parabolically. This had an amazing amount of reset candles here. No, it didn't move down. It doesn't always have to move down. So after we get that close of the 9, you end up getting another day. Let's get that day's midpoint. So I know this is very close, but let's mark that. So let's get that 50% retracement level marked. So we know that if sellers, which that's what we want a low volume red day to pop up above after that green day. What do we want? What level do we want it to hold? That exact control point. It ends up holding that. We look good for continuation. What are we looking for continuation for the upside? You want to see above that buyer candle at 3306. So reset candle, next day showed buyers. No, neither day was amazing, but there's another trade opportunity right there. So I've now pointed out 1, 2, 3, 4 trade opportunities in which you could have traded Amazon just following the basics of how we swing trade in here. So yes, it does count to go back and watch the older videos, regardless if they were from a year ago or from 2 weeks ago. It doesn't matter. You need to go through the swing bot videos. You need to go through a lot of the older videos on the channel. We do have workshops for swing trading, day trading, and all of that. You need to go through those. But this breaks this down exactly to the T, both in the course and on that workshop video on that swing trade account I did. But as you can see, let's keep moving on. Buy reaction, you get the gap up, move up. They end up pushing through that first level. What level is the 3409? Remember what these levels are. Very, very important, strong resistance turns support. So if buyers get above this, we aren't just bullish, we're more bullish. We're recovering very well. So could this have had a retracement the next day? Yes. Did it? No. It ended up pushing up through the very next target. Now you're getting your retracement as you pushed up to those higher levels. What was your volume saying throughout this entire chart? You had relatively lower volume until the play presented itself. Until that happened, you end up getting a lowering volume after the breakout. Then you end up getting rising buyers as both buyers and the volume accumulated. Now you're getting a retracement. So what do you guys think is next for Amazon as it approaches this 3409? What are the next two scenarios we can look out for? Again, preparing, we're being preemptive. We're not making up scenarios. We're not making up anything that can happen. We are just simply pointing out what are the next scenarios that can highest probability happen. We're going to be looking above this area here for more continuation, and here for an 80% retest, just like on the BB system where we look for price to come back where we broke out from, hold as support, and then move back higher to the top of that range. So we can actually start to look for a good bullish retracement after it ends up hitting this 3409, or even right here after the end of today. So I'll have to see after Monday, since Monday's a holiday, let's see on Tuesday what Amazon wants to do with that 9 EMA, or if it wants to retest this 3400. But I hope that was very clear to you guys on that. But let's keep going through some more of these examples, since that was only the first 3. Roku, let me clear this chart. We traded a lot of these today, so I have some of them kind of already planned. So Roku, very weird chart. A lot of people were looking at this for bullish retracement, so I wanted to start looking at it and see, what could I get out of it. So what was my point of it? What was my point of interest? What made me look at this chart and go, okay, I want to start seeing if I can get into this. Well, I saw this morning star happened, so I wanted to start planning off of that. So I'm going to get my 3 most important levels. I'm going to get the outside of my pattern and the midpoint of my pattern. And you see, I haven't had to do this on every single one. I've only done it on some of them, so it is situational. So as you can see, we have our morning star, so our reason to be looking at this chart. Around the same time the market was pushing new highs like Amazon, we were thinking about Roku since it was down in the dirt. Not as long as Amazon, but for a decent amount of time. You have a lot of price action here. And a lot of people were asking me, why did I signal it on this candle? We had ended up taking this play and ended up making really, really good gains overnight. We ended up taking most of our contracts off the table, so we're out of that trade for the most part. But you have our morning star, ends up holding the control point. So again, remember that. The only reason I had entered here was simply from the fact that SPY and NASDAQ were moving up. So again, market awareness. The market was moving up, Roku is not. Amazon is moving up, Roku is not. So if anything, this was more of a speculation play, but with strong analysis with levels. So it wasn't just, let's just enter Roku, guys, randomly. It really was, okay, I have a reason. I like the level it's holding. I like the amount of time that has passed by and price is still holding on top of that level. Next day, we ended up getting that pop. That is when a lot of the people started trading Roku and wanted to get it back up. As you can see, it's retraced since then, and it's looking like it wants to test for bearish retracement, if anything. But just a good overnight swing. Again, not all of these are going to be trades like that DDD chart where you're holding it for 8 days, or Amazon where you're holding it for 4 or 5, 6 days. Not all trades are going to be like that. Some will just be overnight. Not Rocket Lab. Why do I have that one on there? I don't know why I have that one on there. All right, Piton. Why did we like Piton? So the day I had called out Piton was right here. Pretty sure. No, I'm wrong. I am so wrong. It was right here. So why I liked Piton is just because, and this is just again one of the more riskier ways of looking at this with the 9, but I just liked how overextended it was with lowering seller volume. As you can see, since it had that big spike in volume, it had lowering seller volume while also just gapping down, and I could see the weakness. You had a bigger candle here, smaller candle here, doji, another green candle wick here. So I liked the potential, just really a speculation buy to at least reach back towards that 9. If it doesn't, so what? Main target would be that gap range or even this topside gap range. So I'm really not looking for farther levels than that. Okay, so one of the probably riskiest trades that we took was Piton because it didn't actually follow any rules. It just had this kind of hook. I like the weakness that it had, so it was really just me following my gut, taking that overnight swing. But let's see how that did. So after that day had happened, we really only had one chance to sell. I saw like 2 or 3 people in here take it with me. We ended up taking our profits as it passed this level. So not an amazing amount of gains. Another overnight swing, as you could see, just like Roku. So not as strong setup, but again, I just wanted to still share that because not every setup that I've taken these past few weeks have been just super passive entries. A lot of these are, but this was one of the ones that weren't. But let's keep moving on and find a couple more. Space was another one that we had ended up calling out. Oh wait, no, that wasn't supposed to be here though. CRM, here we go. This is what I was meaning to go to. So mark that strong resistance. When we had called out CRM, let me make sure I'm getting this right. Okay, I am. CRM was breaking above this common resistance again, so not a pattern play. We didn't really have that pattern play going towards it, and we like that it closed above the 9 after it popped above that. So this was just another overnight swing, but let's also look at the continuation of price action regardless of earnings. I still want to just kind of go over it. But what happened after we entered that and sold the next day? The very next day, we ended up getting another green day, after that green day, we had another reset candle. So let's mark that next day candle. Let's mark that 50% control point. What are the lows of those 2 days? This candle held over. This candle held over. So passive entry still. Again, you would not enter after earnings. Do not enter on an earnings play. I want to repeat that again. Do not play earnings. You can play after earnings all you want. But as you can see, you have a couple levels to look forward to now. So you kind of have that gap range to look forward to for the rest of the CRM chart moving over. But again, just again, following passive entry, breaking just simple stuff. I didn't really mark anything that hard. It just broke above a simple level. We entered above the 9 and ended up pushing up the next day. Very passive trades that we're taking here. Not all of these are going to be crazy trades every time. XOM. XOM, what was my reason for looking at this chart? We have a morning star, we have our gap down, we have our green candle in between, we have our gap up. I have a Maribuza moving up to the right. We end up just kind of consolidating over. What made me want to short this? Considering I didn't get a good reason to long it, because there wasn't ever a good morning star and then close over. These aren't very confident candles there after a reset. We end up getting a bearish engulfing. What made me want to short that? The passive close under the 9. So another overnight swing just utilizing passive price action. Do you notice another thing in a lot of these trades too? A lot of the time I've been going through them, they've had rising volume. So anytime you see a good close under that 9 after a pattern with a rise in volume, that is the basics of the most passive entry you can take utilizing the strategies that I've been using. BTCM. A lot of you guys like this one. Onion, you pretty much got rich off this trade. You're amazing. But let's talk about it a little more. So, what was reason of looking at this trade? This was another one of those charts that I was just kind of going through on those nights, and I was posting a bunch of examples of patterns, and I had stumbled upon, or I was really trying to look for bearish and bullish kickers for more people, which that'll be in one of these next few examples. But reason was this: what I saw that we had a gap up after this kind of rounding bottom, so we had a good rounding bottom. Then you had a gap up, so I'm going to mark that level, mark that range. And then we end up kind of just cascading back down, holding. I'm waiting for a reset candle, kind of, but you got to wait for a couple more days. It ends up sitting on top of that gap and then pushing back up and closing over that 9. I'm definitely going to be taking that trade. That's an amazing entry. Now we had, and again, throughout most of these plays, you're going to want to grab a good timely contract. You are trading time decaying assets. So please do not just expect to sit in a trade that you bought that expires this Friday for a few days, or else it's going to eat your position alive. So you need to have good contracts. 1, 2, 3, 4, 5, 6 days end up moving over to the right. You end up getting double confirmation after it breaks this common resistance. So after one entry, you have a second potential entry. Ding, ding, ding. Does anybody know, and besides Leland, does anybody else know the answer to this question? What candle is this? I've gone over it 3, 4, 5 times now. What candle is this? This is a reset candle, the breather, the exhaust in between. So what levels are you going to want to mark? That candle's high and low, the open and close, the meat of it, and then mark that 50% control point just to kind of double confirm that it's holding over. So it's holding over my bigger time frame level, and it's holding over that control point level from the previous day midpoint. You end up getting a push over the double confirmation level. So not only did you have 1, 2, 3 entries that were super passive, you had an aggressive 80% entry that you could have taken on that reset candle. So 4 types of entries all on one chart. Let's move on. LMND. LMND was one I've been watching for months. Jason destroyed this chart back in the day, so I wanted to continuate on that and just continue, dropping some TA on it. As you can see, it's just been cascading down for a while. So again, as you can see, I like to look for a lot of those downtrend changes, and that's where you end up getting a lot of those hook patterns, close over the 9s. That's where a lot of setups happen. I'll also link, or I won't link that scanner, but if you want to also scan, you can look over the 9 EMA on your scanner, but what I like to look for is over the 9 with a rising volume. But that's for another time. But what was the reason that I like this chart? I like that we had this gap down, kind of had some just slowdown over this historical support again. Price ended up rallying back up and trying to close over the 9 right there. So I kind of have a conviction on why I want to start looking at this, as it has 1 gap down, 2 gap up, and then the fake over the 9, the close over the 9. You end up getting price just kind of retracing, holding over, and then you could have ended up taking this trade, not on any of these candles. We ended up taking it on this reset candle because I like that price kind of popped up with this bullish engulfing outside of the range too, because any kind of pattern in here, you want to see a strong close over that 9, or it's not giving you that stronger scenario out of the trend change. And again, go watch the trend change video. But in the second and third scenario, you end up getting price just kind of moving to the right. A lot of the time, you'll end up getting it just to try and create that higher low. because you have this low here out of the squeeze. So that's all price is doing a lot of the time when it exits those downtrend changes, is trying to find a higher low to base off of. This needs a passive angle to go up. So that's what it's doing a lot of the time when you see it just kind of exit to the right. But entry on this was after the bullish engulfing candle on the second reset candle holding the 9 EMA. So a good overnight swing. You could even have held it a second day into that. We ended up just taking it overnight into that main 80.75 target. And again, that was a Mustache bot alert that I had posted. So every server who has that bot got to play it. But you guys are the ones who get the bulk of my plays. So you'll never worry about missing out on them. There's always going to be more opportunity. I also wanted to go over Netflix and Disney by Jay's plays. I wanted to cover why he was looking at them. But Jay is another guy in this chat that we've traded with a long time. He was alongside me before this chat even existed. So I always like trading alongside Jay. He always has awesome charts. We always trust each other's TA. But what was the whole reason that Jay was looking at Netflix? He was looking at that main resistance at 565s. Let's adjust that because clearly my level's off. At 565. So he was pretty much looking for a good close over that. He ended up getting that very same day that it kind of popped up on his screen. So he ended up taking it that day. Next day was just a low volume green reset day. Didn't even go down. So really not a pressured day to hold it. You were up pretty much the whole time. Next day pumps. Could have ended up taking profits there anytime you wanted. But what was a big thing Jay saw? He saw the potential in the continuation after volume had not just had rising volume here, but rising volume here. So not only did it have rising volume as it broke into the new area, so as you can see, just basic iron hands is what I'm going over right now, but end up going over that level, rising volume, pushing up, more rising volume. So it's a very good strong strength of continuation. What's a really good target too? After we just went over the TA routine, what level would that have been a really good target towards? That 586. So no, I'm not saying hold a $21 move. You of course could have taken profits on the green day that ended up pushing up. There's no problem with that. Please take profits as you're moving towards your targets. Ever since price hit that target on this day, price has really just slowed down the next 2 days. So yeah, you would have probably been just as smart selling here as anybody else. Could you have made more? Yeah, but what did you plan? A move up to 586, not to 600. Let's look at Disney. What was the reason that Jay liked Disney a whole lot? He was looking for that same type of close over the 181s. My level's off again. 181 was his level though. I'll remove that trend line. And you see I still have it all marked. But after the conviction, why we were looking at it, let's go over that. So you end up getting the gap down, the gap up. So we got our morning star look with the bullish engulfing. Move over to the right, another bullish engulfing. What midpoint does price end up holding? The bullish engulfing's midpoint ends up pushing up a little higher, and instead of just entering randomly, Jay waits for a historical level of 181 to enter off of. Again, utilizing his TA routine, he enters on 181. Could have taken profits on here or on the next day. Would you have been smart just taking it here? Yes, because what did you plan? The 183, that next main target to sell towards. But I wanted to go over those. These next four, the last four charts I'm going to be going over for this video. But these are some of the coolest examples ever. The last three especially, just because of the different patterns that they represented. And I did post them the night before just to kind of give everyone his pattern review, but it is still kind of cool to go back and review with everyone. So what was the whole reason we were looking at AMGN? This one's kind of cool. So the whole reason we were looking at AMGN is because XLV. XLV is the healthcare sector, the second largest sector in the entire market. This is about 13 to 14% of the market. So our whole reason that we liked healthcare is because out of this range you can see, price was holding. Let me make this a little cleaner for everyone to see. That's good enough. But as you can see though, price was holding the range after price made that move up. So after it made that move up with this bullish harami, close over the 9, close over this shoulder, so aggressive, passive, that would end up pushing up to the 137. So this made our new range. This made our new top side of the range, right? 137s. Price ended up coming back down, marking the bottom of the range. That's what you want to see. That is very healthy price action right there. You always want to see, after price makes its high, you want to see it go down and make that low on that shoulder, on that resistance. Whether it was down here or down here, it didn't matter. You want to see that regardless. You can see it's a healthy range, a healthy price action range. Price ends up pushing up, re-hitting that target again, coming back down. We kind of like that it had this rounding kind of bottom look to it. But one of my favorite candles is when you get these hammers with long wicks with good volume. That is some of my favorite candles. That is almost screaming at you that the next day is going to be a gap up candle, that there will be a gap up to that candle, or this will be a really good green day. We end up getting both, a gap up to a really good green day. Price didn't break 137s, but this was the whole reason we liked AMGN. Now let's go to the AMGN chart. So this put this on our screen. And I've seen a lot of you guys start doing this. Ripcord, Ulysses, a lot of the guys in chat. And I'm really proud of you guys for breaking down the sectors more on your own. I have tons of videos on this, and I will continue to push more videos and content on this, as well as the daily streams. But as you can see, the more you work on your own too, the more all of us are going to be upgrading more. So besides that point of interest for healthcare, what other reason did I have to want to enter this chart? I saw that we had this kind of push off that same angle with not a morning star, but it's kind of like a morning star, but that's a long-legged doji. A lot of the time you see this is high indecision. Very high amounts of indecision. Anytime you see that, there's most likely going to be a reversal. Now, I'm not saying the next day, the next week, but a lot of the time you see a big change in investor sentiment because of that candle. It's a very, very indecisive candle. 1 second though, let me get to my chart here. My damn channel just changed. Let me scroll back up to it. So AMGN, we have our point of interest besides XLV. We already have our point of interest for this chart. Now we're looking for a good passive entry above the 9. So what did we end up trading? We end up grabbing that very next day, and we had very, very small gains. So as you can see, overnight swings had very small gains. We ended up taking it just over. I think, who was it? It was ST. ST ended up taking small gains on this. I think I sold for break even just about. But should we still be in this trade? Does anybody in here know this? Should we still be in this trade? We 100% should still be in this trade, even though it hasn't really done a whole lot. Sometimes, and again, that's how it is. So we sold for very minimal gains, but let's see what this looks like. Price ends up closing over. This ends up moving down to what level? The control point, the exact same one that we had marked. So 1, 2, 3 reset days. Price ends up pushing higher. We have another long-legged doji. So yeah, we could possibly be looking to exit here, but we probably would have had a little bit more gains than our previous exit. But I just wanted to cover this one because not every trade is going to be pretty. I didn't want to just show you guys a bunch of winners. As you guys can see, I showed you guys from an array of aggressive and passive entries, but also some that didn't work out quite well, kind of like this AMGN chart. This one did not work out as well as we wanted. Should we still be in this trade? Yes, we should still be trying to ride this trade out with a good expiration on this. It's still holding that angle too. So I wanted to show you guys a good example of something that didn't work out in our favor. I didn't want to just make a bunch of winners in this. But let's go to the last 3 charts. We have F5VE, which I know some of you were getting excited about. Big question for people in the comment section. What candlestick pattern is this? My chat can only get it half right and then the other half right. So as a team, they got it right. But yeah, what candlestick pattern is this? We end up getting a good evening star bearish kicker. So we have an evening star and then also a kicker. So you end up having your kind of move up, slow down. You end up getting your red candle again. So you're pretty much your 3-bar star. But then also you end up getting that close under the 9 after price started entirely under the previous day. So very, very bearish sign there. You also want to see volume. You want to see a pickup in volume as it did. So this would actually have been a passive entry. I don't even want to say that's an aggressive entry. That's a passive entry because it closed under the 9 as well as being a bearish kicker and evening star. So it's kind of a combination of patterns. Price ends up gapping down. We could have also just taken profits going into the next day. But again, let's just cover the price action going over. We're not here to talk about how much money we could have made here or there. We're just talking about the reasoning behind everything. Okay, price gaps down. We end up getting our slowdown. We end up getting our 80% retest of my 9 EMA. So bearish still. Didn't break a new high. Didn't fill the gap. Isn't moving up higher. There is an amazing amount of volume here that gives you any other say so, and then you end up getting that drop after earnings. So no, you would not have kept holding that because of earnings. I'm not here to teach you all how to trade earnings, but this was still an awesome little chart that did end up continuing down. I at least wanted to point out the initial entry. So one really cool passive entry right there. Another chart that I posted that same day was MLCO. Sorry for all my matrix coding color over here. We were covering the difference between a J-hook and stars. But right here, you end up getting a, guess what? The opposite of the pattern I just showed you guys. So I showed you an evening star and a bearish kicker. Right here is a morning star and a bullish kicker. You don't always have to have the gap down on each side. It is preferred though. That makes it a lot stronger. But you end up getting that gap up. So after you got that bullish kicker signal, it ended up also popping up above the 9. So you have a good initial passive entry, or you can wait for even a retest of the 9 at any point in the future. So of course you want to mark your midpoint, and of course look for any kind of dip buys if you are looking at this, because now you already have the conviction that this is bullish. Now you're just looking for entries. Price ends up moving back higher, and as you can see, still just continuing. So you at least want to keep marking these common resistances and these levels that price is sitting on top of for continuation. But very cool seeing the combination of patterns there, also the passive entry move up and just kind of slowly work. Let's look at the very last example, OSCR. Oscar Health. So what was our reason for looking at this chart? We end up getting a piercing line low. So I got my low established. We aren't over the 9, so I'm not in it yet. We end up moving to the right, and we make another low. It's a higher low though, so it's giving us potential that we are trying to build a base. Step one, we are building a base, giving us that point of interest. I end up getting a doji sandwich. We end up getting that red to doji to green close over the 9. So good, a very strong passive entry. You end up getting another type doji sandwich, not as strong doji of course, but you have the gap up, very strong. Seeing that gap up gives you more confidence. Anytime you see those gaps, whatever the next candle is giving you a lot more confidence, right? You end up getting the gap up, close over the 9, gap up, close again, gap up, close again, gap up, retest again, another doji sandwich that ends up pumping up again. So riding the 9, clearly showing you how long you could have held some of these trades. And again, that wasn't, none of that was super hard. So when it comes down to marking your levels around these plays, you need to be marking the fundamental levels around your patterns. So you need to start there. You need to start all around here first. Then you open up your time frame out and you start adding those other bigger time frame levels. I wouldn't have known this was over here. 1975 was over here. I wouldn't have known this was over here where price dropped from before. So I have to start here to give me that reason of point of interest to like this chart, and then I back it out and I start to get those bigger time frame levels and I start building my trade plan around it, just like on that TA routine. But that was a lot of talking. Are there any questions before we move on? I don't have anything else to point out.